Hello and welcome to another episode of FinTech Focus TV with me, Toby. Today I am delighted to welcome back onto the show after quite a long hiatus, not for the company, but for the man himself. Alastair Rutherford, how are you?
Very well, Toby. Thanks very much, and great to be back.
Listen, lovely to have you back. I think it was in the studio probably about 3 years ago that you were last on the show, and it was a great episode then. So I'm really looking forward to talking to it. We've had your co-founder on the show on a couple of occasions subsequently, but Ascendant Strategy has been going from strength to strength. For those who've missed James, who've missed you in the past, who haven't been living under a rock and not heard about the business, tell us a little bit about what you do and what you're about first and foremost.
Yeah, absolutely. So Ascendant Strategy is effectively a niche capital markets post-trade consultancy. As you mentioned, James, my co-founder, he came from the operations side. My background is technology. And we found in the post-trade world, it was very hard to get expertise from consultants. Typically, when you went to the big four or the next tier, what you would get is a manager level or a partner level who did know something about post-trade. But the team that eventually turned up to service you were generally much more junior, had no real knowledge of post-trade, and you ended up basically teaching them. So what we were looking to do with Ascendant was have a very much expertise heavy and practitioner based consultancy model. So that you would be able to bring in people who knew what they were talking about, had done it for 10 or 20 years, had operated at senior levels, knew how to make change happen in what can be quite stodgy organizations, and really add value. So that's what Ascendant Strategy is about. We look at, I guess, three areas. The first is strategy, really. It's okay, where are you? Where do you want to be? What do you need to do to get there? What are the options, etc. Execution thereof, so managing, program management, the transformational change that companies need to go through. And then something else which has sort of emerged as we got going, really starting to help in the post-trade space, help leaders identify where emerging products can be of value to them and their transformation. Typically, post-trade gets a bit overlooked when a firm has an innovation officer. It generally is focused on more the revenue side, front side, and the post-trade environments get a bit overlooked, even if tools could potentially be extremely useful in both front and back. So we are able to, when we present solution options as part of a strategy exercise to firms, we're able to point them at some fintech solutions that may be of interest to a sort of ecosystem-based solution. And there are plenty of them. There are plenty of things that your typical head of ops is just too busy dealing with it day to day to even know about, let alone be able to investigate. But when you look at the sorts of problems that they have, and these problems tend to be quite common across the post-trade environments in most tier 1, tier 2, tier 3 organizations. Some of these fintech solutions we see as being of immediate use in starting to deal with some of these problems. So that's become quite an interesting angle for us, and certainly is something that our clients really value. When they think the answer is, well, we're going to go to Finastra or we're going to go to Broadridge and the usual suspects, actually to have some alternatives which can be tailored more to the very specific problems that they have, and actually address a lot of the areas that the bigger platforms don't actually address, and we'll come back to that later. This is of real interest to people, particularly if it can be done relatively quickly, relatively cheaply, and it's kind of non-invasive or not too invasive to the existing, typically legacy infrastructures that they have in place. So that's the three things. It's strategy, it's execution, and there's what we call this fintech enablement kind of angle. Yeah. Really just a flavor of solution options.
I think there's a lot to be said about that sort of post-trade tech space, and the fintechs have come in there to really add value. We've seen if I look at where a lot of the fast growth's happened across the industry over the last couple of years, fueled by the pandemic, it seems that much of it is focused on real sort of swell of interest, of recognition around that post-trade space. What do you think drives that?
Yeah, I know. Obviously, the pandemic was a big catalyst for that. I think at the senior level, effectively through necessity, sort of reduced the fear levels around adoption of cloud-based solutions. And whilst everybody, it's what we would call them, productivity tools and infrastructural side of cloud, I think what it really started to push was people looking at cloud-based applications and the benefit of having these things from an access and deployment perspective, obviously. If your own infrastructure made it hard to have secure access to applications, if you were using a cloud-based application, there potentially were alternative routes for access for that, which I think, again, people were sort of forced into just to be able to get through their day's work. But in general, I think people getting comfortable with cloud-based applications and starting to see the benefit of that. The other thing that we noticed is the things that went wrong in the early few months of the pandemic were, particularly this whole thing around fails and the amount of transactions that were failing for various reasons. Because it was so extensive, the visibility of these issues went much further up the management chain than smaller issues would do in pre-pandemic type issues. So the problems that were really a function of manual processes that were breaking or highly difficult to execute in the working from home environment really raised to senior management just how much manual work there was going on. And the need, therefore, to do something about that when they came back and were sort of moving back more into a business as usual type mode of operation, a recognition that these manual processes were actually much more widespread than I think people thought, and that they were a limit to how far you could scale your organization, or I guess how much you could take people out of your organization without causing problems. On top of that, then you've got the regulators looking at operational resilience, which is effectively an end-to-end process resilience. It doesn't care whether it's automated or manual, but if you've got big manual chunks, your resilience is hampered in those parts of the process. So the regulatory focus on automation, on top of a realization through the experience of the pandemic that there were large chunks of critical parts of process still done manually. And then I guess coming out of that, less of a drain on investment resources targeting regulatory change. I think it's fair to say that the previous 15 years, vast majority of investment has had to go towards the big regulatory projects, and that eased a little bit, I think, in the last few years. So it gave people a little bit of opportunity to invest in automation.
And it's led to this, as you alluded to beforehand, a really sort of interesting new breed of businesses that have grown relatively quickly, but also given choice. And I've had the great fortune of having a sneak peek of the upcoming paper that you guys have put together alongside the Realization Group, entitled "The Future of Post-Trade Will Be Driven by Collaboration, Not Isolation." Yeah. It's got some really interesting pieces in this all the way through it. Give us a flavour for what people can expect when they read through this. Sure.
So it starts from something we've been preaching from 4 or 5 years ago when we first started Ascendant Strategy. That if you look at your costs in post-trade, generally we find that about 60% of post-trade cost is people doing manual processes. And this is not people sitting in front of their core platforms, tapping away, blah, blah, blah. This is happening outside those core platforms and covers vast swathes of the process that the core platforms do not. And what are these things? So this is people interacting across their own organizations, but also probably the bigger chunk of it is interacting between their organization and other organizations who are part of a transaction. So the counterparty, the agents, the custodians, whoever it might be that are party to a securities transaction. When things don't go smoothly, the first thing you do is you're going to pick up the phone, you're going to email or whatever. You're going to contact these outside or these other stakeholders in the transaction and try and work out where something's gone wrong. And all that manual activity, both internal and intercompany, makes up about 60% of the cost. So there's a big automation issue there. As we look at what you can do internally, obviously there's lots of automation options that where you control your own data, where you control your own process, you can look at automating, and lots of people have done a lot in that dimension. But then when you start looking at the interaction with other organizations and what we're calling collaboration, these things are starting to emerge and starting not quite to mature, but certainly to gain adoption. And these are tools that aid that collaboration between organizations. And so we focus on a couple of different areas. One is effectively stores of data that reflect the different views of the same transaction that the different participants have, and make those different views available to everybody in the transaction. So in the current world, you may have 4 or 5 different organizations, each having a representation of the transaction that you're dealing with. And if any one of those 5 has a materially different version for whatever reason, then it will fail. It won't work. So a lot of what people are doing is, when this happens currently, is, as we said earlier on, get on the phone, get on an email, WhatsApp, whatever it is. It's typically an unstructured communication, as a first attempt to work out why things are different. Now, if you can look at all the different representations of that transaction, if someone has collected them and made them visible, you don't need to get on the phone or get on the email. You can look and see and go, right, this person here has something wrong. Everybody else has got what we think is the right number, but that's the wrong number there. So you're instantly taking out that first piece of manual process through the removal of that email and call or whatever communication. So these kind of data sharing, data collaboration tools we see as extremely important to supporting that collaboration going forward. So that's one area we look at, and the particular organisation that we talk to is Access FinTech, who I think are providing, I guess, the most mature of that kind of thing at the moment. The other area that
I've had Roy on the show a number of times, and I think it's always an interesting, I guess, innovation that he brings to the table, and their growth's been phenomenal, hasn't it?
That's right, and one of the reasons for that is it's a really useful tool. I mean, once you've got, there is
that
a
helps, doesn't it?
There's a really what we found talking to some clients is they don't get it. It's quite hard to explain. If it's not really obvious to you, it actually can be quite hard to understand. Some people get it in seconds. It's, oh, right, yeah, I get it. And other people, what does it do? They don't really, I guess the concept is, because it's not the way they think, it's conceptually a little bit challenging for some people to pick up. And we've seen some clients whom we've introduced them to just not get it, just simply not get it. And across, an entire team from a senior manager down to actually people at the more junior level who you would have thought would get it, but that just didn't gel. So I think, though, that of course, because as we said, if you've got 4 or 5 parties to a transaction and one of them isn't actually pushing their data into Access FinTech, the other lot are, and the other lot know that you aren't on there, they still know it's you. So I think increasingly you're going to start to see pressure from the non-players, pressure on the non-players, from the players for the non-players to actually get on board. And I think that's starting to fuel the very rapid take on. So
I think that's interesting, because you also quote Phil Slavin in the paper from Taskice, and similar to Roy and what you've just mentioned there. I think Phil said something just in a drop away comment, probably a year ago, where he talked about the sort of growth of their business and how it's becoming more and more adopted in the ecosystem. And he talked about the inevitability of Taskice, which I thought was a brilliant turn of phrase for it, where because of the reasons you've just mentioned, it becomes inevitable that people use the product because of the it's a choice of the efficiency gains. And I think in the piece you quote PostTrade as the last frontier of efficiency gains, but there are massive efficiency gains to be reached in it. So there's that piece, but then there's also, as you say, that keeping up with the Joneses and the old age of trading technology, which is about making sure that you're there and you're the quickest, the most efficient and cost-effective solution out there in the marketplace, because there's becoming more and more margin pressure, right?
Exactly right. And I think particularly with Taskice, a big element of it is client satisfaction, because what we particularly like about the Taskice tool, if you're not familiar with it, basically it supports intercompany workflow by if you have an issue with a topic with a particular organization, in the old and less than so current world, unless you know the name of the person in operations to go to deal with this, the chances are you're going to go to a shared inbox. So you'll send your email off to settlements@whatever.bank.co.uk. You've got no idea once you've sent that, has someone picked it up? Has the right person picked it up? What's happening? Is it being processed? Is someone doing something about it? You just don't know. Whereas the Taskice tool has a very specific sort of internal workflow that if you issue that query, it's making sure that it does get to the right people. If someone hasn't picked it up in time, it gets escalated through effectively a list of people, and you will get updated on the process of your query. So I think they've got their own stats showing that on average, something like it takes 80% off a response time, or it's some very large number. But just having something like that means you've got confidence that your query is going to be dealt with, and you're going to get response to it, and you're not in that really awkward position where that you're getting calls about, well, what's happening with this transaction, and you've just got your queries off in the ether somewhere. So conceptually, that everyone gets that one. Everyone really, there's never any trouble explaining that one to people, because it's so obviously a thing that people need. So yeah, again, I think it's a particularly good example of a relatively simple, and I don't want to undermine the complexity of the technology. I'm sure it's wonderful, but the concept is really simple. It's a fintech solution that can be put in place. It doesn't need massive integration with things, but it can lead very quickly to huge productivity gains and huge client service gains. So that's the sort of thing, that sort of simple concept, low integration type solution that we think, and going back to the article I wrote in your magazine, this is, I think this overall area is where fintech organizations have a real opportunity. And as we see with Access FinTech, heading for another massive success in terms of a product. So if people can get their thinking caps on and think about it from those perspectives, it doesn't have to be super complex. It doesn't have to be a new cryptocurrency. It can be something conceptually quite simple, but it can mean huge benefits for the post-trade world.
Absolutely. And I think when you mention that sort of post-trade world, data comes into the equation as well. And I know there's a section there where you're talking about it. And I thought I picked out a quote there where you talk about data has always been seen as a revenue generator, but the seeking it out as in terms of efficiency and optimization is a really interesting part of that. And I guess when you think about that, it is. I think for many years, the financial and capital market space has sort of fallen behind in the sort of arms race of data, and it's been there and says it's been the mot du jour for year after year, but it hasn't really been looked at in the same way. And I've said this on many times on this show, in the same way it has been to create massive transformation in the e-commerce world, as for example.
Yeah.
And I think when you're looking at here in this post-trade world where there does exist such a significant amount of opportunity that lies within it, that efficiency and optimization aspect is overlooked in terms of revenue generation over the world. Do you want to expand on that a little bit?
Yeah, definitely. I think, so I think the data one is particularly interesting because it is a huge challenge for organizations to sort out their data internally. Particularly if you've got a mix of in-house legacy technology, vendor platforms, inevitably the data models that these different systems use to represent transactions and other things are going to be different. And you have various translation and adapters that sit in between these things to make the whole thing work together. But it does make life difficult if you're trying to present a single view to the rest of the world. And again, coming back to so recognizing that getting that resolved is a good thing to do, also recognizing that it's not a simple thing to do. It's a big deal to try and fix all this stuff internally. And lots of people make large investments in trying to do it and get some of the way and run out of money and still left with a bit of a mess. Other people make sort of better progress, but it's expensive and difficult. Part of the benefit of having something like an Access FinTech representation of your data in a standard form, which is known across all the participants, you are effectively forced into a standard data model, but it's because of an external tool demanding that. So to use that tool, you're forced into that kind of standardization process. And it's almost then that it's a sort of outside-in transformation that you could then start to say, okay, well, we'll then bring this data back in that format, and we can start to make that a standard format for our internal usage. And it works well because it's the same format that other people are familiar with, and the same representation of specific data attributes that other third parties are familiar with. So there's benefit of doing it obviously beyond just your own organization. So I think, again, there's an opportunity here through collaboration to drive what we call this outside-in transformation of your data representations internally as well. And basically that becomes a catalyst for your internal standardization of data representation as well. So we think that's a critical thing, and that collaboration platforms will be extremely helpful in accelerating in reaching that goal.
I think it's really interesting, this, isn't it? Because you put the title of the piece as say the future will be driven by collaboration, not isolation. And there's natural reticence, I think, about that at various stages in the industry to collaborate, and that's where you've had these legacy systems. But we know that there's a new world, and the collaboration's part of it. What are some of the threats that sort of stop that, the barriers to it, and overcoming those? What does the future look like for this? What are the benefits?
Yeah, I think that you've got your standard set of barriers: internal politics, securing funding to make it happen. Generally, there's you come across people who are very protectionist around their own, particularly in-house built applications, and don't want to accept that third-party solutions could be a way forward. With any kind of external service, there's always the fear that that there may be multiple games in town, and what do? Do you subscribe to all of them and see who wins, or do you try and pick a winner and not do the rest? So there's definitely a potential issue around competing providers of these types of collaboration services. And again, case of Access FinTech, I think we see that Swift are building something similar. Quite interesting why Swift hadn't done that 25 years ago, but they are very much doing it now, and they're trialing with some of their members. So you could see that. Again, it's a slightly different model. They require a unique transaction identifier to do the matching, whereas Access FinTech do it on the trade facts. So there is a barrier to entry there that you need to be able to share a UTI when you initiate the transaction. But you would have thought with the market penetration of Swift, all the communication is already there because it's leveraging the messages that already spin around the world to all the different participants in the settlement of a transaction already. So they have a bit of a head start in terms of the integration of the data, but a slight barrier with the UTI. So how do you do this? How do you select the one, or do you do them all? There's a potential barrier, but I think these things are addressable. Particularly, for example, the Taskice thing is a no-brainer in terms of minimal implementation cost. I think all Euroclear participants are able to use the service. Sponsored by Euroclear, so it's the really small cost of entry into that. I think the shared database, shared external database access, FinTech style, that does require a little bit of a conceptual leap to understand why it's of value. And as the example earlier on, maybe some people just don't get it. Initially, I think they'll get it soon enough when their clients start saying, we really need this because everybody else gives it to us.
It brushes off the traditional conservatism of the space, isn't it? The space is conservative about taking transformation technologically on board. But I think in this piece you quote Jamie Dimon from JP Morgan Chase, where it's waves of technical innovation are now crashing in more frequently, and I think that's become commonplace. Yeah. And that sort of gives people the encouragement to see this sort of these sort of plays as far more obvious, despite the barriers that come into play, because it has to happen to make sure that the efficiencies are there.
And as we were saying earlier on, the reduction of the fear factor around having your data in the cloud, which having your data outside your organization obviously is a requirement for collaboration. So I think people just need to recognize that you're probably a lot better off having your data in a controlled application in the cloud than somebody in operations sending a spreadsheet out with that same data in it, generally 1 out of 100 times the wrong email address. So, think about what the alternative is. It's not that it doesn't go out there, it goes out there in a lot less secure format.
It's just astonishing that that's still something that happens.
Underpins the whole industry.
yeah, absolutely. Ali, I want to segue slightly away to something which I know you guys have been really involved in. I'm looking forward to collaborating with you later on in the year with regards to the whole collision of TradFi and DeFi and everything in between it. And I know that whilst there's a lot of sort of hype around the crypto side of it, underlying technologies where your heart lies within it. Give us your view of everything that happens in that sort of one, digital assets that sort of ties into all of this too.
Yeah. So such a big topic. So I think that there's two sides of this, maybe three sides. I think the first thing is talking about the coexistence of TradFi and DeFi and the collision that they're on. And you only need to look at the value that currently sits in the DeFi world and recognize that even if you as an organization don't want to be offering those kinds of products to your clients, it might well be that your clients want to start using some of that as collateral for the more TradFi type things. So how do you do that? What's the infrastructure that you need in order to do that? If you do actually want to provide those services, be clear about your strategy. What does that mean for PostTrade? What does the business strategy imply in terms of infrastructure that's required for PostTrade? So in terms of that mix of TradFi and DeFi products, we do see a lot of blank looking faces when we talk to PostTrade leaders around, well, what do I do? And the first question is, well, what are your business trying to do? Well, I'm not really sure. So you can't possibly have any idea about what you need to do if it's not clear what your business strategy is. And as we see, a lot of organizations are effectively setting up standalone units using very specific technology solutions, white labeled third-party products, and really only bringing this stuff together for financial and risk reporting. But it's effectively a standalone organization. And we saw Nomura announce this just earlier this week. But what we're actually a bit more interested in is the application of the underlying processes and fundamentally DLC technology to the TradFi world itself. And I think increasingly there is a fairly thoughtful conversation going around. You see this a lot now on webinars, etc., about tokenized securities and what would be the roadmap for getting to inevitably parallel universe of tokenized securities, as well as how securities are currently processed. But the combination of the change in business process to allow atomic settlement supported by DLT technology, we see this as extremely interesting in cracking a very large chunk of the residual manual processes away. Just on it, we've done another simple analysis around this for a very simple sort of equities post-trade organization of 100 people. If you look at the set of post-trade processes, well, actually pre and post-trade processes that currently happen, because your settlement is instantaneous, post-trade doesn't really exist. Now, what that means is some things that currently happen post-trade need to move pre-trade, and particularly this is pre-funding of cash and insurance of availability of security so that you can settle instantaneously. But all the other stuff that goes on around affirmation, confirmation, and several other processes largely go away. And just looking at this simple analysis, we estimated about 50% of your headcount should be able to be eliminated if you can adopt the new business process. So that's very interesting, we think. It is a huge change to the way that the business is done. And I think there's probably oversimplification. Whenever you say to people, well, how will this work? And the answer is smart contracts. Well, smart contracts it's just code. It's just code. So it's not necessarily simplistic code, because if it was simplistic, you would have done it already in existing environments and you would have rolled it out. So a little bit skeptical of the smart contracts are a solution for everything. But if you're changing your business process, and this is the bigger deal, to do things before the settlement or the execution effectively and simultaneous settlement. That simplifies the complexity of some things that would need to be automated. But it's a lot around changing those business processes around making sure you've got your cash and securities lined up for the thing to happen. And again, recognizing you can see in that roadmap hybrid solutions where you've got a mix of different things. You could also see that change in business process for simpler transactions, trading through Hargreaves Lansdowne. It's a highly automated thing and it's pre-funded. And why wouldn't you go to something that was more efficient, lowered the overall risk requirements, etc. For the simpler product flow? Yes, you might have a more complex flow for other more complex products, but for a vast majority of the volumes, particularly in simple FX, bond, equity transactions, it should be relatively straightforward. I say relatively straightforward. I don't want to make it sound simple, but it should be conceptually straightforward to come up with a model that works there. So yeah, we're quite excited about that. And I think if we go back to 3-4 years ago, the general skepticism around blockchain and blockchain for securities, possibly it was partially an education thing, I think. I think also as time's gone on and people start to see what these technical solutions are good for and what they're not good for, and then they recognize actually it's not just a technical solution, it's a fundamental change to the way the business is conducted, enabled by different technology. And I would actually argue that if you agree to change the business process, you don't need a DLT to make this work. There are different reasons that DLT might be applicable, but existing technology from a few years ago would be able to do this as well. It just might be more effective to do it using DLT technology. Again, I'm not I don't have a hard view either way on that one, but if that's a way of making the business process change easier, then great. That is a huge advantage, I would say, for the technology that enables it.
Yeah, I think when you go back to that debate 3-4 years ago, I think I find it fascinating, that whole sort of DLT piece, and you've just seen hype cycles come and go. But I remember sort of 5-6 years ago thinking, people were saying, right, it's going to take another 6 to 10 years for this to properly land in the space, for it to be to have the confidence, the use cases, etc., for it to really be mainstream. And then all of a sudden there was rapid acceleration when you thought, right, this is going to be happening next year or this year, and everyone's going to be fully adopted. And then of course it goes through the next wave of it where it dies down a little bit. Yeah. And I think we're in a really interesting curve at the moment where over the next couple of years, we'll see major innovation in this particular space, which is why I'm really looking forward to talking about it with you a little bit later on in the year. And as you said, it's a big subject. It's a subject which we've got a whole new show to come up with. I think we probably covered an awful lot of ground in today's conversation. And what I love about you guys is you've mentioned it a fair few times about simplification. And when you talk about consultancies in your space and the real value that comes out of it, it's about making tricky things as simple as possible. I think that's something that you guys do really, really well. And I also think what's really important, you touched on at the very start, and I wanted to cover there as well, is consultancy to me has always had that badge of having partners come in, do the big picture sell, and then you have people who don't really know they have that level of expertise who end up trying to implement the solution, and frustration comes into it. Yeah. Your model, I think, is a really interesting model about being niche and providing real value based off expertise in a particular play, which is why I think Ascendant Strategy is no-brainer in the space and something which you guys are doing really, really well. So there'll be people out here who are listening to this, and it will chime true with them, everything that you've been talking about. Ali, who should they get in touch with? How should they get in touch with you, and who should be getting in touch with you?
Yeah, well, first off, thanks for your kind words there, Toby. It's nice to hear a positive view on that. So we're always happy to help. You can go to our website, which is www.ascendant-strategy.com. There's a contact us there, make it easy, or you can go to alastair.rutherford@ascendant-strategy.com, james.maxfield@ascendantstrategy.com. And we're very happy to discuss things. We like to talk to the market in an exchange of information fashion before we get involved in a sales type conversation. So we're always interested to hear what people's problems are and help them understand where that sits relative to the rest of the market. And that's a conversation that is of interest to us. Whether it develops into sales or not is a different type thing, but we're always ready to have a chat.
Sounds good to me. Well, look, I would ask you to play us out, but I know that you're going to get coy with all of that. With the it feels weird that we haven't mentioned the plethora of guitars sat behind you beforehand. We've had a little off air before that as well. But Alastair, maybe another time we can do a musical version of FinTech Focus TV with you on lead guitar. It's been a pleasure as always. Thanks so much for coming on the show, and really good to talk to you again.
Yeah, great, excellent to catch up. Thanks a lot, Toby. Cheers.
Absolute pleasure. Thank you all for watching, and we'll see you soon on another episode of FinTech Focus TV. Thanks a lot.